Welcome to Quick Bite, your fast and friendly Florida insurance
Hello,
update.
hello, hello. This is Roshonda with the Isom Insurance Group here in the Sunshine State of Florida, welcoming you back to another Quick Bite episode, your fast and informative insurance market update. Today is Wednesday, December 24th, 2025, Hump Day. And since it's not only hump day, it's Christmas Eve, today is a little different. Things slow down, people pause, they reflect on the year behind them and think about what's ahead. So today felt like the perfect time to talk about something that comes up in almost every insurance conversation I have. And that is how insurance is designed to work versus how people think it should work because or think it works thinks or how they think it works versus how it actually does work, because when expectations don't match reality, that's when frustration happens. Claims feel personal, premiums feel unfair, and people feel misled even when no one actually did anything wrong. So, in this quick bite, I want to slow this down, explain how insurance is truly built, why misunderstandings are so common, and how understanding this can help you make calmer, more confident decisions heading into 2026. Let's start with the biggest misconception. Many people believe insurance is supposed to fix everything, that if something goes wrong, insurance should step in, no questions asked, and make it right. But that's not what insurance was ever designed to do. Insurance is not a warranty, it's not a maintenance plan, it's not a prepaid repair program. Insurance is a risk transfer tool. Its purpose is to protect you from financial loss caused by sudden accidental events, not gradual problems, not predictable aging, not long term wear and tear. Once that difference clicks, a lot of confusion fades away. At its core, insurance exists because some losses are simply too large for individuals to handle alone. The system works like this: millions of people pay relatively small premiums into a shared pool. That pool exists so that the few people who experience a major loss are not financially devastated. Here's an important reality check: most policyholders never file a major claim in a given year. That's not a flaw. That's how insurance survives. Insurance only works when losses are uncommon, unpredictable, and severe enough to justify shared risks. If insurance paid for everything all the time, the system would collapse. This is where expectations often break down. Insurance is designed to respond to sudden damage, not slow deterioration. Think about it this way: a pipe that suddenly bursts and floods your home, that's sudden and accidental. A pipe that corrodes over 15 to 20 years and eventually fails, that's aging and maintenance. A tree falling on your roof during a storm, sudden, right? A roof leaking because it's 22 years old, expected wear, due to expected wear. Insurance draws a very firm line between these two categories. Not to be difficult, but because without that line, insurance simply wouldn't work. Let's talk about Deductibles, because this is another area that causes frustration. Deductibles are not a punishment. They exist to keep insurance focused on meaningful financial losses. If insurance paid for every small issue, every minor repair, every inconvenience, premiums would become unaffordable very quickly. Industry data consistently shows that policies with lower deductibles experience far more frequent claims, and frequent claims lead to directly to higher premiums for everyone. Deductibles protect the system by reserving insurance for serious events. Another phrase that creates confusion is full coverage. There is no such thing as full coverage. Every policy has limits, conditions, and exclusions, not because companies want to deny claims, but because risk must be defined before it can be insured. Without boundaries, insurance cannot be priced, measured, or shared fairly. When someone says, I thought I was fully covered, what they usually mean is, I didn't realize where coverage ended. That's not insurance failing, that's expectation not matching design. Claims are emotional, but they are handled contractually. When a claim is reviewed, insurance companies ask very specific questions. Was the policy active? Was the cause of loss covered? Was the damage sudden? Did policy conditions apply? Claims aren't decided based on intention. They're decided based on facts and policy language. That's why two claims that look similar can have very different outcomes. Understanding this ahead of time helps reduce disappointment later. Insurance works best when it's used the way it was designed to protect financial stability, to absorb catastrophic risks, and to provide peace of mind, not perfection. When expectations align with reality, insurance becomes a tool, not a source of stress. If today's quick bite resonated, maybe you felt frustrated by insurance, confused by claim outcome, or unsure whether your coverage truly fits your life. Now is a great time to get a no obligation policy review. We can walk you through how your policy is designed to work, what it's meant to protect, and where expectations should be set. If you would like this review, please visit our website, which is at the bottom of the screen. And you can go on and request for a free policy review. If you found this quick bite helpful, please like this video, share with your friends, and drop comments below. Please drop comments below with any insurance questions you'd like for me to cover in any future episodes. Quick bites will drop every Monday, Wednesday, and Friday at 2 p.m. Eastern. This video is for educational purposes only and should not be taken as legal, tax, or specific insurance advice. Please consult a licensed insurance professional regarding your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. Thank you for watching. I'll see you next time. Please stay safe out there. Enjoy your Christmas. Please take time to spend time with your family and friends. And always remember the reason for the season. Bye.
Thank you for watching. Visit us at isomInsuranceGroup.com.